Africa is a continent overflowing with natural resources. Yet many of its people have historically been left behind. For centuries, this paradox has been defined by one precious metal above all others: gold. In Ghana, a nation once so rich in the metal, it was named the Gold Coast. Billions of dollars in wealth have been systematically extracted. Foreign interests have, for generations, pulled gold from the ground, often leaving a legacy of poisoned rivers, devastated communities, and economies that struggled to benefit. But that old story of exploitation may be changing. The government of Ghana is making a bold, decisive move to take back control of its most valuable resource. It's a declaration of economic independence, a move to reclaim its own destiny, and a decision that could set the stage for a new kind of global economic dynamic. This isn't just about gold. This is about a nation fighting for its future. To understand Ghana's fight today, you have to understand the wounds of yesterday. The story begins over a century ago with the infamous Scramble for Africa. At the Berlin Conference of 1884, European powers carved up the continent, drawing arbitrary lines on a map that became the borders of modern nations. Ghana, then known as the Gold Coast, was a prize jewel for the British Empire. Its soil was laced with gold, and for the colonizers, it was a treasure chest to be emptied. Colonialism wasn't just about political control. It was about economic design. The entire infrastructure of the colony, the roads, the railways, the ports, was built not to serve the people of Ghana, but for one primary purpose: extracting resources and shipping them back to Europe. The wealth of the land was siphoned away, helping to fund an industrial revolution thousands of miles away, while the rightful owners of that wealth saw little of the benefit. When Ghana achieved independence in 1957, the first sub-Saharan African nation to do so, a wave of hope swept across the continent. But the shackles of political colonialism were soon replaced by the invisible chains of a new economic order. The old masters were gone, but the systems they had built remained. Foreign corporations, armed with complex legal agreements and backed by powerful international finance, stepped in to continue the extraction. For decades, Ghana's mining laws were often structured to favor these foreign entities. To attract investment, governments offered lucrative contracts and generous tax incentives. But this came at a steep price. The legal frameworks often made it easy for multinational corporations to send a majority of their profits offshore, leaving only a sliver of the immense wealth for the Ghanaian government and its people. This wasn't just a coincidence. It was a system where Ghana owned the land, but foreigners often owned the wealth that came from it. The nation was trapped in a gilded cage, surrounded by the immense value of its gold, but struggling to use it for its own prosperity. This historical plunder set the stage for decades of economic hardship and environmental ruin, a problem that has festered for generations. The glittering allure of gold hides a dark and devastating truth. For the people of Ghana, the decades of foreign-led extraction have left deep wounds on both the land and its communities. The cost of this plunder isn't measured on stock exchanges in London or New York, but in the poisoned water, the barren land, and the persistent poverty in the very regions the gold comes from. The most visible scar is environmental. The explosion of illegal small-scale mining, known locally as galamsey, has been an ecological catastrophe. While often carried out by Ghanaians, this shadow economy has historically been fueled and funded by outside actors who operate without regard for the law, flouting regulations and evading taxes. They introduced heavy machinery that accelerated the devastation to an industrial scale. The process is brutal. Mercury and cyanide, toxic chemicals used to separate gold from ore, are dumped into rivers and streams, the lifeblood of communities. Once clear rivers like the Pra and the Ancobra, which provide water for millions, have turned a murky, toxic brown. Vast stretches of rainforest have been torn down, and thousands of hectares of forest land have been destroyed by illegal mining. Farmlands, particularly cocoa farms, that are the backbone of Ghana's agricultural economy, have been wiped out, threatening the nation's food security. "We are poisoning ourselves," one Ghanaian artist said, after using polluted river water as paint to depict the disaster. The economic drain has been just as severe. For years, a chaotic and decentralized system allowed numerous licensed entities, many of them foreign, to buy gold directly from small-scale miners. This created a market ripe for exploitation, where gold was smuggled out of the country in staggering quantities. It's estimated that Ghana was losing billions of dollars in revenue every year to this illicit trade. Profits were moved offshore, prices were manipulated, and the Ghanaian state was deprived of the funds needed for development, for schools, for hospitals, for a better future. The social impact is perhaps the most heartbreaking. In mining communities, the promise of gold has often brought only despair. A lack of opportunity has pushed many young people into the dangerous world of galamsey, where they work in perilous conditions, with frequent reports of collapsed mines and tragic deaths. In recent years, some galamsey operations have become more violent, with reports of illegal miners armed with weapons clashing with security forces. This is the true cost of looted gold: a poisoned environment, a bleeding economy, and communities trapped in a cycle of poverty and violence, all while their birthright is shipped overseas. For decades, this story of exploitation was the status quo, an accepted reality not just in Ghana, but across Africa. But winds of change are blowing across the continent. A new generation of leaders and citizens is rising up, unwilling to accept the economic arrangements of the past. They are questioning the old deals, challenging foreign-held narratives, and demanding something radically different: true economic sovereignty. This awakening is part of a growing continent-wide movement of resource nationalism. We're seeing a powerful trend of African nations refusing to be mere playgrounds for foreign profiteers. In Burkina Faso, the government has taken steps to gain more control over the country's gold sector. In Namibia, the government is working to ensure local participation in its newly discovered oil and gas reserves, rejecting old models of foreign domination. From Zimbabwe to the Democratic Republic of Congo, the call to reclaim control over natural resources is growing louder. Ghana is now at the forefront of this movement. The election of a new government in December 2024, leading to the inauguration of President John Mahama in January 2025, signaled a seismic shift. Campaigning on a platform of economic renewal and a tough stance against the destruction of Galamsey, his administration promised to rewrite the rules of the game. This isn't just a policy tweak. It's a psychological victory in the making. For too long, the narrative has been that Africa's resources are simply up for grabs. This new movement flips that script. It asserts that Ghanaians and all Africans are the rightful stewards of their own wealth. It is a direct challenge to the international structures that have profited from the old system for so long. The days of quiet compliance appear to be over. Ghana has decided to stop asking for a fair share and has started taking it. In April 2025, the Ghanaian government did something that sent shockwaves through the global gold market. The Mahama administration enacted the Ghana Gold Board Act, landmark legislation designed to dismantle the old, exploitative system and place the nation's gold wealth firmly back into its own hands. This was Ghana's bold gambit, a decisive and unapologetic move to end the looting. The core of the new policy is as simple as it is revolutionary: a ban on foreign participation in Ghana's domestic gold purchasing market. As of mid-2025, all foreign individuals and companies were ordered to exit the local gold market, and their existing licenses for buying and exporting were rendered invalid. The chaotic, decentralized system that enabled smuggling and price manipulation was officially over. In its place, the government established a new, powerful state-run entity, the Ghana Gold Board, or Gold Bod, which absorbed the former Precious Minerals Marketing Company, PMMC. Under the new law, Gold Bod is now the sole entity legally authorized to purchase, assay, and export all gold produced by Ghana's vast artisanal and small-scale mining sector. Foreign companies wanting to buy Ghanaian artisanal gold can no longer deal directly with miners. Instead, they must apply to purchase it from Goldbod, ensuring every transaction is transparent and taxed for the benefit of the state. Furthermore, local gold purchases are now required to be conducted in the Ghanaian cedi, a move designed to strengthen the local currency and end the dominance of the US dollar in the domestic trade. The government has put serious muscle behind this initiative, aiming to formalize the industry and plug the leaks that have drained the country of billions. To enforce this new reality, a dedicated Goldbod task force was established with stringent oversight. The message could not be clearer. The free-for-all is over. Ghana is open for business, but on its own terms. Ghana's bold move to reclaim its gold has already begun to send economic shockwaves through the nation, and the initial results are stunning. This isn't a long-term theoretical plan. The positive impacts are being felt right now. The most dramatic impact has been on government revenue and foreign exchange reserves. In the old system, much of the wealth from the multi-billion-dollar artisanal gold sector was lost to smuggling. By centralizing the trade through Goldbod, the government is finally capturing that value. Gold exports in 2024 surged to $11.6 billion, a massive 52.6% increase from the year before. In the first half of 2025 alone, gold exports hit a record $8.3 billion, with Goldbod purchasing around $5 billion worth of gold just from the small-scale sector. This flood of revenue has had a profound effect on the country's economic health. It has dramatically strengthened Ghana's foreign exchange reserves, which are crucial for economic stability. The Bank of Ghana's domestic gold purchase program, which laid the groundwork for these policies, helped skyrocket the country's physical gold holdings from just 8.7 tons in 2021 to over 33 tons by mid-2025. This newfound stability has, in turn, boosted the national currency. The Ghanaian cedi appreciated by around 40 to 50% against the US dollar in the first half of 2025, making it one of the world's best-performing currencies and helping to curb inflation. The government isn't just selling the gold, it's using it strategically. The Gold for Oil program, though facing challenges, was designed to use bullion to directly pay for fuel imports, shielding citizens from volatile global oil prices. There is also a major push to move beyond simply exporting raw gold. Ghana is now actively seeking investment to build domestic refineries, aiming to become a major hub for gold processing in West Africa. This would allow the country to capture even more value from its resources and create skilled jobs. Of course, this assertion of economic independence hasn't gone unnoticed. The decision to effectively kick foreign traders out of the local market and the non-renewal of the mining lease for gold fields. Damang Mine sent a clear message. This has created tension with some foreign investors. Ghana is charting a new course, one that prioritizes its national interest above all else. and the world is now watching to see what happens next. Ghana's revolution in its gold sector is a story of empowerment, but it's not without its challenges. The road to true economic sovereignty is fraught with obstacles, and the government's crackdown has created new hardships even as it solves old ones. This is not a simple fairy tale ending. It is the beginning of a difficult journey. The most immediate challenge lies with the very people the policy is meant to ultimately help: the small-scale miners. For generations, entire communities have built their livelihoods around artisanal mining. The sudden formalization of the sector and strict enforcement against galamsey have, in the short term, led to significant job losses and economic distress. Leaders from mining communities have warned that without viable alternative livelihoods, the policy could backfire and be met with resistance. Implementing such a sweeping reform is a monumental task. There was some initial resistance to the new licensing regime, forcing the government to extend its deadlines for a smoother transition. The success of the entire endeavor now rests on the Ghana Gold Board. Can this new state entity operate with the efficiency and transparency required? Can it avoid the corruption and bureaucracy that have plagued state-run enterprises in the past? The government has promised severe sanctions for any misconduct, but the risk remains. This brings us to the biggest question of all. Will this massive gamble pay off in the long run? Taking on powerful foreign interests is a risky move. It could deter future foreign investment in other sectors of the economy. The global economic system isn't always designed to favor nations that rock the boat. Ghana has chosen a path of defiance and may face pressure from international institutions and foreign governments uncomfortable with this new assertion of African power. The nation stands at a crossroads. It has bravely confronted the ghosts of its colonial past. It has reclaimed control over its most precious resource. But now, the hard work truly begins, ensuring this reclaimed wealth translates into real improvements in the lives of ordinary people, supporting the communities affected by the transition, and building a sustainable economy for generations to come. The story of Ghana's fight for its gold is a story about the future of Africa. Nations across the continent are waking up and demanding control over their own destinies. If you want to keep up with this new economic scramble for Africa, follow the nations that are fighting back and understand the forces shaping our world. Make sure you subscribe to our channel and hit that notification bell so you don't miss our next report. For decades, the story of Ghana's gold was one of foreign plunder and local suffering. It was about immense wealth being drained from African soil to enrich others, leaving behind a legacy of environmental ruin and economic despair. But today, a new chapter is being written. Ghana has drawn a line in the sand, transforming itself from a victim of exploitation into an agent of its own economic destiny through the creation of Goldbod and the bold decision to ban foreign traders from its domestic market. Ghana has launched one of the most significant efforts at resource nationalism seen in a generation. The early results are promising, with soaring revenues and a stabilizing economy. But the path ahead is filled with challenges, both at home and abroad. The government must navigate the social fallout of its policies, ensure the wealth is managed transparently, and withstand the inevitable pressure from a global order shaken by its defiance. This is more than just an economic policy. It is a declaration of independence in the 21st century. What do you think? Will Ghana's big bet on itself pay off and pave the way for other African nations? Or is this a gamble that could backfire in the face of global economic forces? Let us know what you think in the comments below.